Hello everyone, welcome to the show. Today we have a very special guest, Mr. Mustafa Daudi. He recently wrote a book on e-invoicing and he is a senior tax advisor. Thank you so much for coming to this talk. Welcome to this show.
Thank you very much, Mr. Zubair. It has been an honor to come on the podcast, which is very renowned in UAE model, and appreciate and look forward to it.
Now, everywhere that is going on e-invoicing that year, the first question which comes in my mind that year, is this just a UAE thing or from the global point of view, or I'm to say that e-invoicing is just following by the UAE or some other part of the world? What is the history behind that?
Perfect. So this has been very well covered in my book, which I have written recently, on e-invoicing. It starts with the history of e-invoicing structure. This was started by Latin America, which and the key implementing countries are Brazil, Mexico, Chile, which has far defined sophisticated models of transmitting business invoices. Then Europe is also coming up with a technology package which is called VIDA that will mandate the countries which are into cross-border transactions to issue invoicing. Now, our neighboring country Saudi Arabia has inbuilt its own invoicing system called as Fatura, which it has implemented in phase wise from 2021.
Okay.
And now UAE learning from the global practices from countries developed and developing countries as well, and the model they are using to best implement the invoicing. UAE has come up with a very robust technology partner, and it is implementing invoicing accordingly through Peppol's network.
Peppol's network.
Perfect.
So, what is this Peppol network and how it works and why UAE choose it?
Perfect. So Peppol is, first we have to go with what Peppol is. Peppol is Pan-European Public Procurement Online Network. So this model, unlike there are other models as well on e-invoicing platform, but Peppol is globally recognized and is implemented in more than 100 countries. Okay. So if we look into the UAE operating model, it mostly operate what is in international perspective, not into the UAE's perspective. Okay, so if suppose UAE implement the Peppol's network that has implementation in more than 100 countries, UAE already joins the league in the global platform itself. Suppose it has to transmit the invoices from currently UAE to Belgium or Australia or Singapore who are into the Peppol's network, it will be far convenient than developing its own robot, own closed network, which will be having integration into issues with the global platform. So this is where Peppol's comes in picture.
Okay, so let's elaborate that. Is suppose how basically I want to know that how the system works in UAE. For example, if I say if suppose supplier want to send an invoice that here,
Perfect.
so how it is going to work?
See, you must understand that, see, why UAE adopted this has a very central idea of the framework which the UAE government is operating. Okay, so there are two implementing bodies. One is the Ministry of Finance and the other is FTA. The rules of the e-invoicing is decided by the Ministry of Finance and the implementation part is left to FTA now. Now there were two models, centralized models and decentralized models. What does centralized models means? One authority controlling and supervising the invoicing completely, but UAE is one step ahead, follows a decentralized model. That means only the final output will be reported to the FTA as corner file, but all the responsibility of system failures, issuance and administration would be on the part of the key players, that is the buyer and the seller. Okay, now to mention it in the layman terms, you have to understand that buyer and seller were already two parties involved in a transaction. But now there is an IT partner as well. The invoice will flow from your system to the ASP, then it will transmit and validate the technical specification, and then transmit to the buyer ASP. Buyer ASP will revalidate it and transmit it to the buyer itself, and both the ASPs are parallelly reporting the invoices to the FTA as well in real-time scenarios.
It means that first when the sending by the supplier to their ASP,
Correct.
let me call ASP1,
Perfect.
supplier is going to give the information to the FT. No.
Supplier is issuing the invoices and routing through ASP.
ASP. Perfect.
Now ASP has the responsibility to report this transaction to the
That's
FTA.
what I want to. I mean to say that here, buyer is going to report to the FT.
Correct.
Both the ASP is going to report to the FT.
Buyer is not going to report to the SP. Both the ASPs of the buyer and the
That's what I'm
sellers
saying.
are
Yes,
correct.
It means there are in these process, what I'm understanding here, there are four parties here: supplier, ASP1, ASP2, let me call it, and the buyer.
Correct.
So ASP1 and ASP2, they are going to report to FTA.
Correct.
Buyer is also going to report to the FTA. No.
Buyer is not going to report because the communication will be
through the ASP.
through the ASP.
Perfect.
Yes.
So it means that here now, as two ASP involved that here, if anything which is not going to the ASP or if any contradiction between them that here, so they will easily come to know that here that something, it is not a genuine, something the fake transaction, whatever, okay, some miscalculation or the invoice has not been generated correctly that here, because it is not going to be reported by one party.
Correct.
The multiple parties are reporting.
Correct.
Perfect.
So it closes the loop. So the seller ASP is transmitting the data in real time to the FTA, as well as when the transmission is complete and buyer receives the invoices, buyer's ASP is also going to transmit the same data to the FTA.
It means the ASP of both the parties is going to report to the FTA.
Correct.
Okay.
Perfect.
And I came to know that recently the FTA came with updated guidelines in June 2026.
Perfect.
As per my knowledge, they also issue a guidelines in the February 2026.
Perfect.
What is the key differences between both of them?
Basically, if I have to explain you the hierarchy of implementation, there is a ministerial decision 243-244 deciding the framework of the invoicing implementation. There is one cabinet decision for the administrative penalties, what would be the implications if you fail to violate any of the terms of the invoicing, and the FTA is implementing the part. Okay, the part implementation, the Ministry of Finance communication is clarified or simplified by FTA and it is issuing guidelines accordingly. Now, 1st February 2020, first guideline was version 1, was issued on February 2026, then a revised version on 1st June 2026. The key changes or there wasn't, if I don't have to put it that way, it is not change, it is an addition or rather clarification. It has mentioned Appendix 4 and Appendix 5. Appendix 4 is something which governs the responsibility of the ASP related to what kind of data they have to store. It also helps you to identify that you can delegate the storage of the data to the ASP, but ultimate responsibility will be on your part as well. And your ASP's responsibilities that has been clearly defined in Appendix 4. Now, Appendix 5 is the commercial terms. Commercial terms in the sense there was a discussion on advance contracts, advance payments, and retention contracts as well. So this was clarified, and this is clarified in Appendix 5, which is more from the commercial terms.
It means that in the Appendix 5 is what you're saying, that they are also talking about that there are two important words. The first that I want to discuss with you, the advance payment that they have received.
Perfect.
So how these e-invoicing talks about the advance payment received?
So that is very much valid question, Zubair, because see, when we are dealing in current balance of economy, there is always the transaction is initiated with some kind of an advance, maybe 20-30% or maybe 100% of the full invoice as per the terms of the agreement between the buyer and the seller. Now what is happening until now is you are issuing an advance invoice, and ultimately in real parlance, once the invoicing is live, you have to issue invoice that would be a tax invoice, compliant invoice for the advance amount, okay? And then when you are issuing the final leg of the invoice, that means you are completing the delivery of the goods or completing the service itself that mandates you to issue the final invoice. At that point of time, you are required to issue second technical tax invoice only, which will be using a predefined code linked the existing invoice also.
Okay.
So FTA has two set of invoices for the same kind of transaction and knows the full value of the contract by the aggregation principle. That is one thing which is a key change which this guidelines has clarified.
Which means that when we suppose some party receive out of the suppose the invoices of 100,000, we receive a advance, let's say 20,000.
Perfect.
So perfect. First, they are going to issue the in system is going to generate for the 20,000 only.
Perfect.
So there are some the code
that will be predefined code. Yes.
Predefined code.
Yes.
Now, and second time when you raise the invoice for the remaining 80,000,
yes,
it is going to be connected with the first one.
Yes.
Perfect. So then they know that here.
Yes. What is the full amount of the transaction which is reported to the FTA.
This is about advance, but at the same time, then which is very common in that in the field of the construction,
correct,
real estate, is the retention part.
Correct.
So, is anything special which talks about the retention under this?
Absolutely. So now with the guidelines, the retention part is specifically very much clear. It is crystallized. Now you have to understand that there are two events when we talk about continuous supplies. Okay, continuous supplies mostly in types of where you have specifically mentioned about real estate. There is a concept of approval, final approval from the buyer. Okay, so when the milestone has reached that triggered you to issue an invoice, there would be certain amount which would be retained. Okay, now you have to only issue the milestone payment which is as per agreement you are eligible to issue. That part you will issue one front, and when the retention is finally due, say for example the retention period is for 6 months, and the buyer has to give the approval that yes, you can issue the final invoice as per the contract. At that point of time you have to issue second invoice covering the retention. So these are two separate transactions. First is the milestone trigger which you will issue an invoice, then there will be invoice for the retention payments as well.
Okay,
two separate invoices.
Two separate invoices. Yes, it means the first year, for example, the invoice is of 100,000.
Correct.
And there's a retention of 20%.
Perfect.
So, I'm going to say the supplier when they issue the invoice to the customer.
Correct.
So the invoice is going to be for 80 or 100,000.
80,000.
80,000.
Yes, correct.
Will it be mentioned that the 20,000 is?
It need not mention anything because you are transmitting the invoice digitally with predefined text codes and the fields. Wherein the second part will always link to the first invoice only. There would be a predefined code to link the prior invoice also. But you need not mention anything in the description that this amount is retained or something like that.
Yes.
So the existing practices will be done away with, and you have to follow fresh implementation practices
for the retention amount.
Yes.
Perfect. As per my knowledge, that here under the RCM, the domestic reverse charge mechanism, that they have got the pure hydrocarbons, these electronic devices. In your book, you also mentioned about the metal scrap that here.
Perfect. So fine with it, Mr. Zubair. Thank you. You brought up this point. Now you have to understand that the FTA is trying to, deliver the administrative load in a way that it is compliant. Okay, now point is, when there are two registered persons are involved in the transactions, the RCM works perfectly well because you issue an invoice, they pay that VAT on it and they take the credit. So it makes no sense for the FTA also. So those kind of transactions are into the RCM perspective. This was similarly with the metal scrap as well, 153 cabinet decision number of 2025. Of the additions you have already mentioned, hydrocarbons, pure metals and stones kind of things. Now they have added the metal industry, metal scrap industry as well, if the transaction is between two registered users. So point is, this industry is very wide. Okay, now they have, and very much unstructured also. So you have to understand that. Now this will be the key things. If the transactions between two VAT registered dealers, there will be RCM thing, and there will be predefined text code for the system to know that the liability is on the buyer of the goods. So that has to be mapped and implemented accordingly. So this is very much clarified in the current guidelines as well. Yes.
In the current guidelines, they also mention about the insurance companies, what they have to, from which perspective they're talking about for these.
Perfect. Yeah. So insurance is one of the sectors, like when we talk about insurance, the reinsurance part, and not all reinsurance part, there are contracts in reinsurance which applies, in which VAT is applicable. Okay. Now part is, the government is very much specific that the whatever specific transactions which wherein VAT are applicable, E-invoicing this would be accordingly applicable. There is no bracket exemption for the insurance sector. So only kind of a flexibility which is allowed in the system is that the broker or the principal, either of the parties under predefined contract, can be the issuer of the invoice, but the liability of the invoice will be ultimately with the insurer, that is the principal of the supplier. And in that scenario, that insurance supplier has to map all the treaties or the evaluate all the contracts and categorically identify which contracts are subject to VAT and which contracts would be under exemption, and accordingly map it in a way that only VAT taxable contracts are subject to invoicing regulations, and that has been covered in the revised guidelines. Recently, yes.
What if they don't follow? I mean, what are the penalties for it?
See, point is obviously FTA has its own mechanism. Now, if you talk about penalties, Cabinet Decision number 106 clearly defines the part of penalty. Now, the very common penalty is the implementation deadline penalty, that is 5,000, which is very much known.
What is the deadline for that for the implementation?
So recently they have revised it. First it was 31st July 2026 for the industries or the businesses having a revenue of 50 million AED. Now they have extended till 31st of October 2026,
Okay.
but the final go live deadline is 1st January 2027 itself. Okay. And for the second leg of the transaction businesses wherein the revenue is less than 50 million, the appointment of ASP will go by 31st of March and implementation will be by 1st July. And for the government entity, the final go live will be 1st of October 2027. Now, when you talk about penalties specifically, there is one important penalty that if you are unable to issue e-invoices, there is a per transaction penalty of 100 AED, which is capped at 5,000 AED, obviously, because if the system has failed and you are generating a number of invoices, because they are populating the scenario wherein B2C will be even covered. So they have capped it to 5,000. That is one such penalty. And second is failure to report the system failure. Now that is what the decentralized model has come up. Okay, if there is system failure and you are not reporting, even the buyer is and the seller, both the parties are liable to report. Okay, and the timeline is 2 days. If you are not reporting within 2 days, there is a separate penalty of it for 1,000 AD per day. Okay, so that is where the decentralized model is effective, because they are more concerned with the administrative part. They don't want any hiccup or responsibilities. Everything is rested on you along with the penalty burden. So you make sure that it is operational and effective every time.
Perfect.
Yes.
So how you see that is a bigger picture that here.
The bigger picture is the data which will be reaching the FTA in real time. Okay, so the point is when we are visualizing the future of UAE economy. Now, when every transaction, now B2B transactions will be reported. Now, when we see B2C transaction as well reported live, in that government will be having real time of data of the monthly businesses they are getting out of VAT and every other revenue streams it will be. And in that it will bridge the audit gap as well, because none of the transaction can escape the reporting leg.
Correct.
Nowadays, when you see the current structure of the VAT filing, that has just a one pager online form.
Exactly.
No detailed transactions are
No,
flowing.
not about the detail of purchase.
Absolutely.
This is the one figure that you have reported.
Absolutely.
Correct.
Yeah. So FTA will be having live reporting of what your businesses should report vis-a-vis what you have reported, and that gap is answerable, obviously. So there would be separate, reconciliation you have to prepare and keep it ready. Correct. For the outward side and inward side as well. And that will help not only to minimize the audit exposure risk, but subsequent penalties, because FTA penalties are reasonably very high. Okay. And for businesses, what it means is it may give some initial technical hiccups till you get it go live, but after that what I foresee is that the payable system will be automated. The revenue would be, cash flow would be automated as well, because there would be business cycle accordingly to collect the payments as well. cash flow, if it gets automated, much of the future decisions get automated as well. Okay, so this is the bigger picture what I am seeing with the invoicing implementation, along with pre-populated VAT returns.
Yes.
That means the compliance side will be more tech driven than manual or semi manual driven kind of things, and that will actually change how you are reporting to the FTA and you are preparing the final VAT return that way.
Correct, correct. Now I would say the entity should have to maintain a record properly, and everything is known by the FTA. And as I know that here, we know that when we go to the FTA, the website as well, that they all are the corporate tax, VAT, excise, all are interconnected.
Absolutely.
So the people cannot play with figures now. That is real time information is going to get by the
correct. And the transparency which it gives into the system, that is robust, because that is ultimately going to would be beneficial for the government as a whole to build more transparency into the system, and it will uplift the image of the UAE as a whole.
Correct. Yes. Thank you so much for coming to this podcast. It's very informative that I hope our audience also have liked it that year. If you have any question or any comment you want to say, you can write down in a comment section. We'll give a reply there. Thank you so much.
Thank you very much, Mr. Zubair. Thank you, FintEdu, for hosting this.
Thank you so much.
Appreciate it.
Thank you so much.